Good day, all. Ira Epstein of Linn Associates with your metals market wrap-up for this Thursday, the 16th of May, 2019. So, we had an interesting day today. The safe haven trades, and safe haven means people get scared, they start buying gold, the Japanese yen, treasury instruments. That came off the market. Even Bitcoin sold off a bit today. Bonds and notes down. Look at your gold and your silver market down pretty good. Even the copper came off its high by 300 points today. The stock market up, making up some ground that it had lost earlier in the week, but overall not really going anywhere. Where the damage was done was in the gold market. And one of the things, if you're a chartist that looks a little longer term, it has to be a concern to those that this market can't seem to get over on a weekly continuation chart, this 18-week average of closes if you're bullish. You're getting a bounce and that's about it. On the daily charts, the attempt to get up and going, and you can see here you're spiked up, you made a higher high, and you all of a sudden lost that momentum. Not much going on yesterday, but today you certainly pull back into everything. I look at what the swing line is doing, and it's still bullish. It still has the pattern of higher lows, higher highs. You can see that. But now I want to know where the key moving average is. One of the things that I teach in my charting course, and you hear me talk about, is I believe that there's a line in the sand that traders look at. And I think in futures, the 18-day average fits that bill very well. Often the market will fight its battle trying to figure out what to do next from that number. Look at how you pulled back right into it, and that's what you held today. Should this market take out 1282.40, you lose this bullish swing that you had. What else do you see on the chart? The 100-day average was like a brick wall. The market hit it, just couldn't go from there. What other numbers do you want to see? I want to see where those Bollinger Bands are. A Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. Another way to look at it is when you hit it, it's a resistance point or a support level. And I teach that the first time you hit it, it was right back here. That was probably where I think the pros were trying to take some money off the table. It would be the same on the downside. Got it? Now I'm going to look at momentum. Problem. You came in yesterday, and I know I had been saying over the past 2 days, this market has hit some upside targets, the 100-day average, the upper Bollinger Band. It's overbought, not pushing through, and now you can see momentum is turned down. Momentum often leads price, and overbought conditions correct themselves in one of two ways. They either break down or they convert and embed. Embed means you take both numbers that make this up and you put them over 80. You haven't done that in gold in this whole time frame that we're looking at. On the downside, it did it one time. That was it. So gold is not showing a tendency to change the course of its momentum to locking in a trend one way or the other. It's more of a swing trade than it is a trend trade. When we come to GLD, the key was if you took out this low of 123.12 in an overbought condition when you're against the 100-day average and the Bollinger Band, I think that would end the trend for the pros. They'd be scared. Actually, I think they should have been scared the first challenge of the upper Bollinger Band. Where are you going? I wish I could tell you, but I think the 18-day average is in the market's gun sight. GDX was a failure today. GDX had a shot, higher lows, higher highs. Was it going to make a play for the upper Bollinger Band? If it doesn't, I'll be looking right here. Is the 18-day average going to happen? And if you take out 2059, you end this leg of the uptrend, and that's exactly what occurred. You both came down to that number. In fact, if you look at the opening today, you'll see it was right by that 18-day average, and it just worked lower during the day. So now you're stuck with a pattern of a higher high, lower low. The bigger picture is probably that the Bollinger Bands are going sideways, and momentum has flattened out on you. In the gold-silver ratio, I'm sorry to say it, the silver market is getting decimated. In fact, industrial metals against gold have been getting decimated. And look at this. The higher you go, the more ounces of silver you need to get 1 ounce of gold. So right now you need 88.47. That's a big number. When you come to the silver market, you made a challenge of the lower Bollinger Band and you're oversold. What do I think? I think the pros took some money off the table there. Now the question is, does the market follow through? It is not in a trend. It has a higher high, lower low pattern, and it's oversold. We'll see what it does from there. In the copper market, this to me was the bears stopping the rally. As long as you have an embedded reading, my thought process is that on the rallies, the pros are coming in to sell the market. Another element. If you take a look here, you had a bearish crossover that has not made a lower low yet on this trade, and it's still there. Is it going to make a run for that becomes my question. As long as this stays embedded, the word isn't fearless, but I think the pros are really taking on more shorts. In the palladium, this was a cover your short day today. You've had a rally, you're oversold, you fell into the 100-day in the lower Bollinger Band. Doesn't mean you can't go lower, doesn't mean you can't collapse, but you don't play for that, because if you do, more times than not, you get burned. Trend is down. Will the market get caught between the 100-day and the lower Bollinger Band? It is oversold. It is not, I don't think it's embedded. Both numbers today are under 20. They were under 20 yesterday, not the day before. It is not typical to embed. So as markets get overbought, they correct. As they get oversold, they correct. That's the way I'm calling it. In the palladium market, I've got a pattern of higher lows, lower highs. I don't know what to do with that. The resistance is the 100-day to the 18-day to the 18-day to the 100-day average. What would turn the market bullish is closing over the 100-day. What gets the market going again to the bear side is taking out these lows right here, and that could send you back to the lower Bollinger Band. Last, the dollar. The dollar's just refusing to lock in any type of real trend. It gets up to the Bollinger Band top, falls back, plays around that 18-day average, threw out a sell signal, never did quite get to that 18-day average, and today, this high took out that one. You've had that anyways. Right here, you had taken it out. And people look at it, it's only 2 points. Taking it out is taking out the previous high. So that's what you're left with. If it goes up, and that's the if, will it hit the Bollinger Band, or is it going to fight at the 18-day average a bit? It did a little bit of both. It fought at that 18-day average. You can see it opened under it right here, and now it's trying to lift itself. Momentum is up. Bias is up. It is not trending. If it does rally, I'd look for resistance at 97.90. Now realize, the higher the dollar goes, the more expensive U.S. goods are all over the world. One of my favorite tools that I like to teach are pivot points, besides swing lines, obviously, and everything else. We have a 3-point video series. And what a pivot point does is it looks at the previous day's range, creates a center line, like you see that white, and then the numbers above it represent resistance levels or sell points. And in this case, sell 1, sell 2, or buy 1, buy 2. The difference that I do that the other traders do is I tie into it slow stochastics, and I look for the momentum plays. I was watching today the NASDAQ as it was up high. I think it was 106 points higher, and I'm looking at it. Believe me, I was so ready to tell traders just go short this market or whatever else I want to say. Did I? Well, you have to be a subscriber of mine to know what I say, and I don't come out here with the recommendations. But what I do tell you is I will show you the tools that I use in some of them, and I create a 3-part series to give you an idea about it. Call us. You can go to our website, www.iraepstein.com. You can click up here, and that'll take you to our carousel page, too. I'm Ira Epstein. You have a good day.